Do you know what keep most brilliant real estate investors broke? It's not their deals. In fact, it's that they don't know how to raise capital the right way. I have seen million-dollar opportunities stuck in silence because they fell into beginner mistakes that could have been avoided. I am Jennifer Maldonado, and I have managed over $150 million in real estate assets, from ground-up development to full-scale hotels. And I have led operational teams of 100 employees, so I have been in a place where I had $35 on my account, managing a multi-million dollars project where the high stakes are pretty high and there's no time for error. I still feel the sting of being unprepared when it comes to raising private money. And if I can step from that place of doubt and fear where I can fail into leading millions with confidence, then so can you. Today, I'm gonna show you the 7 most common mistakes that people make when raising capital and how to avoid them so you can break through, create impact, and lead deals with confidence. Most people believe that capital raising is just about the numbers, the returns, and the money. Raising capital is the power to deploy ideas, trust, and alignment. And if you want to step into that room with authority and do all of that, you cannot afford to play small. You cannot afford these 7 mistakes. The mistake number 1 is treating raising capital like asking, not giving. When I first started talking to strangers to invest privately in my deals, it felt like I was asking for favors. It felt needy, most likely sounded desperate. I don't know. And it was like I was inconveniencing people, and the result, rejection after rejection. Even when I felt I knew what I was doing, there was this invisible barrier between me and the investor. It was almost like a lack of authenticity. And after trying many ways, working hard, making hundreds of calls, hustling like most mentors taught me, my self-worth just plummeted. It wasn't just a rejection of a deal. It felt like a rejection of me. Every no made me wonder if I was enough, if I was good enough to do this. So have you ever felt like that? Like you're knocking on doors, but really you're knocking on your own confidence? That pain is real, and it will keep you broke if you don't flip it. So have you ever felt like you're asking for help instead of offering an opportunity? And this was one of my biggest breakthroughs. Sales didn't come to me naturally. When it felt like a transaction where I was getting something first, it felt out of character with me, and it didn't allow my confidence to come to the surface. I decided to change my approach, and I needed a new strategy that showed who I was. Begging definitely repels. Inviting, magnetize. Raising capital is not asking, it's opening a door to align opportunity. Warren Buffett says, the best investment you can make is an investment in yourself. And investors want opportunities that align with confidence, not desperation. So you need to take the time to invest in yourself. Investors can smell blood, and these will attract the wrong type of money. And yes, there is such a thing as wrong type of money. So raising capital is not about asking, it's about inviting. So when you shift from desperation to alignment, trust follows, as well as the right capital. And the day I realized I wasn't asking for help, I was offering access to wealth, everything shifted, the weight lifted, conversations flow, investors lean in, and I was not longer begging. I was leading money, I was controlling the frame, and I invite investors. The pro side of you, the one that doesn't want to make mistakes, will repeat this to themselves. I don't beg for money, I invite wealth. Again, I don't beg for money, I invite wealth. Here's the mistake number 2, overloading with numbers, not story. After working for Fortune 500 companies like G&J and Nestle as an engineer, you will think that I hide this down. Stories stick, spreadsheets don't. And I bury people on their numbers because I thought data equal credibility, but all it did was shutting them down. Ever feel like you're talking and the more you say, the less they care? Man, that's hell. It's like watching belief slip away right in front of you. So, have you ever felt like you're drowning your investor or even buyers in data, information, and features, hoping they will just get it? You're just providing information that confuses the mind, and confused mind don't buy. It's no different in raising capitals. Investors buy into clarity, not complexity. And they remember stories, not spreadsheets. When I learned to lead with story, the room started leaning in. And suddenly, people remember the vision, not the spreadsheet. And when they remember the story, they remember me. So your numbers validate. You must have those, but the story magnetize. So complexity kills trust. Clarity creates certainty, and certainty closes deals. Remember, story magnetize, spreadsheets don't. So the mistake number 3, it's pitching too soon without even building trust, right? Can you think of that person that every time you see them, you want to hide? You know they're going to try to sell you something, pitch a new idea, or even feel that energy that they're bringing. And most people think speed means confidence, right? And they think that they even know you and you're like, I don't even know your name. Or maybe they don't even know anything about you. So instead, when you approach people without even understanding anything about them, it triggers a skepticism. Have you learned that? Pitching too soon is like proposing marriage on the first date. So calm down, dude. You know, they just came for the free appetizers. So that's how investors feel when you rush. We all have been that person in different areas of our lives. The one who makes most people want to run the other way, right? And that's pretty painful. It's a painful mirror. Have you ever felt that rush? That rush into your first minute elevator pitch because you were scared of losing their attention. I get it. We all went through the outdated training that used to work in the 80s when information was scarce and apparently only the person that had this pitch, this was the only people that knew this unique thing. And that pitch was the door. Today, with massive information accessible more than ever, trust gives you access to the millions, but not before. So, rush repels. Patience magnetize. So trust first, capital second. Again, trust first, capital second. Stephen Covey says trust is the glue of life. It is the most essential ingredient in effective communication. So the moment I slow down and ask real questions and let trust breathe, capital start chasing me. And that is the shift you're waiting for. Build trust first, and your pitch becomes inevitable, not intrusive. Trust before transaction. If this is resonating with you, I am creating a masterclass called Rapid Raise Methods. We open the masterclass a very limited numbers of times a year, but we have a waiting list you can sign up for in the description below. It is for real estate investors and leaders who are ready to magnetize millions with confidence. And if that's you, join the waiting list at the description below. You will be the first to know when doors open. Mistake number 4, ignoring legal and compliance basics. Most people fall in love with the idea of capital raising. They go to an event, understand what syndication is, and they think it's easy. And I have seen deals collapse because someone made promises and didn't inform themselves about managing syndications. Access to capital can be simple, yes, but if you don't know how to manage the funds or the syndications properly, not only will it cost you credibility, it will trigger the SEC, Security Exchange Commission penalties, and even bigger problems and punishments. So one wrong word, one careless promise, you don't just lose a deal, you lose your credibility, your peace, and maybe even your freedom. So that's hell of ignoring compliance. That's really an issue. So, and probably you're aware. Maybe have you ever worried you might say the wrong thing and ruin your credibility, or even worse, not know what you missed and get into legal trouble? Professional capital raisers protect investors and themselves by honoring compliance. Having a mentor or a legal counsel not only prevents credibility loss, which is hard to get back, but avoids headaches and problems that can lead to unwanted places, right? It is critical that you understand the compliance requirements for the type of capital you're raising and how you are structuring your deal. It's pretty simple. The Securities Exchange Commission says this. Full and fair disclosure is the cornerstone of investors' protections. So when you get the compliance right, when you get this right, when you protect investors and yourself, you walk into the room with unshakable confidence. You know you're clean, and that makes you magnetic. Protecting your investors' trust means protecting their money. Also means protecting your future, your dreams, your clients, your family. Compliance is not just paperwork, it's protection. And protection magnetizes confidence from investors. So compliance is confidence. Mistake number 5, chasing everyone instead of qualifying the right investors. Oh my gosh, there's a worse feeling for me than rejection. And that is the feeling like I wasted my time. And I remember following mentors' advice and coaches' advice. I used to think that everyone was a potential investor. And I probably wasted hours on coffee meetings with people who have never had the means or the mindset to invest, or people who had completely different values that I didn't want to open my door for them, right? Allowing them into my opportunity was like draining my entire energy, right? It's that kind of investor. Some investors drain you so much that you need a nap after coffee with them. Then probably set up a therapy and a Costco size latte and a silent retreats just to recover, right? So chasing everyone left me exhausted. So if I can be open with you, it felt like dating the wrong person over and over again, draining my energy, stealing my time, and leaving me emptier. Have you ever felt like left a meeting thinking, why did I even spend time with someone who was never going to write a check? Or felt completely drained? I wish someone had told me, qualify my investors, right? I wish someone would have said that to me. Make sure that they are aligned not only with the deal, but with your character. Don't chase, qualify. You need aligned, capable investors, not endless coffee dates. So Gene Collins says that a great vision without great people is irrelevant. Your power is not in chasing money. It's in discerning the right money. Chasing drains, qualifying magnetize. So your power is not in finding more people, it's finding the right people. So the first time I sought across from an aligned investor, I felt peace. It was enjoyable. It was fun. The conversation was effortless. They didn't need convincing. They needed clarity. And that was the kind of match. That's the kind of match you deserve. The more clear you become in your aligned capital, the more energy you can redirect to other areas of your life. Qualify, don't chase. Here's mistake number 6. Talking only about returns, no impact. Coming from an engineer background, of course, blame it on that, I found numbers to be sexy. I thought investors will melt when I say 18% internal rate of return. You know what happened? They look at me like I was describing fiber content on a cereal box. Have you ever felt like your deal is solid, but investors don't connect to it? Somehow, on the returns, I lost my unique way. I was hitting them with percentages and acronyms and sound expressive, but it left no mark. It didn't even make sense to me that I was presenting this awesome deal, having the best deal in the room, and still leaving invisible. You know what I miss? The deeper why and unique position of my investments and the story behind that. My deals were not just numbers. They are the art of investing where strategy and soul meet to create impact, legacy, and values while performing great. And when I added the story of how our projects were transforming and are transforming communities with our Spark investment frameworks, investors' eyes continue to light up. So the true numbers inform the mind, but impact magnetizes the heart, and only the heart say yes. So at that moment, I raised not only $5 million in 30 days, but it opened the opportunity for me to raise the millions of dollars, the 100 millions that I'm planning now. So when you connect with wealth to purpose, capital flows with ease. Impact magnetizes more than an internal rate of return or catch on cash, whatever you want to use. So the mistake number 7 is not investing in yourself first, right? Everyone has the capability to learn the art of raising capital. Most people try to raise capital without coaching, community, or mentorship. Every time they found themselves repeating over and over again the fundamental mistake that not only costs money but costs years. And I know this because in every area of my life, I try to advance without these components, and it resulted in mistakes that double or triple the time on the solution and cost more money in the long run. So I tried to go along in different areas of my life, and it didn't work. I wasted years, and the worst plan, I thought it was normal. Believing struggle is the only way. I honor my struggle, but there's many other ways you can accelerate that path. So have you ever thought, I can figure these out alone, only to find yourself stuck? The first deal you close is with yourself. When you invest in you, you magnetize others to believe in you. So I messed up for many years in areas of my life. But when I invested in myself in those areas, I brought community, coaching, mentorship, everything accelerated. Deals flows, investors, and trust, and I became the woman I knew I could be in every area of my life. So your ability to raise capital grows as you grow. The best raise you can make is in yourself. The first capital you must raise is in your own capacity. Repeat after me and touch your heart. Whatever is your goal, the first deal is with yourself, the commitment. So now that you have these 7 mistakes that keep, beginners stuck, and I hope you learn them so you don't get stuck, let's go over them. First, stop begging instead of inviting. Don't present the numbers without the story. Don't pitch too soon, right? That's the third mistake. Ignoring compliance, that can get you in trouble. Chasing everyone, that can drain your energies. Talking about the returns they will never remember. And not investing in yourself is the worst mistake you can make. Each of these mistakes steals trust, momentum, and wealth. But when you flip them, you step into authority, alignment, and flow. So here's my invitation. What is the one mistake you have been making? And what will you do different today? Are you ready to turn on your capital raising pro hat? Because the leaders who rewrite wealth don't wait for permission. They move with clarity, courage, and a spark. And if you want to learn more about building wealth, watch the next video, The 12 Habits of Quietly Wealthy Women. And of course, guys, you will learn a lot of things.